Hey YouTube, Jason here again with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys smash that like button and also subscribe and turn on the notification so every time I release a new video, you get updated. In today's video, we're going to be talking about the 5 key habits to saving money, okay? But before we jump into that, make sure you guys click the link down below. Check out my Patreon page. Some really cool things going on there and all that. Don't forget Robinhood. Get your free stocks down below. So there's a link in the description. But let's jump right into it. The 5 key habits to saving and also making money. Okay, the first key habit is change your mindset. You need to change the way you think about money, the way you think about everything. You need to start becoming a saver versus a spender. Stop accumulating stuff, right? Do you really need 10 pictures in your room? Each one of those pictures has a value that when you buy it, it actually goes down in value, right? Unless you're buying Pokemon cards or sports memorabilia or something like that. Those things are okay because they go up in value, right? They're appreciating assets. But we'll get back to that later on. But you have to change your mindset. Here's a great quote that Dave Ramsey talks about, and it's live like nobody else today. And in the future, you truly will live like nobody else. And my take of that is if you live when times are good, if you take all that money and you save it and maybe start putting in the stock market and real estate and start to invest, you're living like nobody else, because while you're saving all your money, maybe you skip meals, stop going out to restaurants, spending $30, $40 on a meal, right? Going partying, spending $100 on drinks. Take that money and save it and start to build a little savings account that you could go out and buy a share of Apple or a couple shares of Tesla or something like that, right? Or maybe save up to buy your first house or and that you can live in, maybe house hack, bring people in, right, roommates, to make them pay for the mortgage. Because everybody just says, hey, let me buy the nice car because I'm making some money. Well, the car is a depreciating asset. Again, we'll get more into all that. But you have to change your mindset, the way you look at money. Start becoming a saver versus a spender, or a investor versus a spender, right? Second, what are your wants versus your needs, okay? What do you really want versus what do you need? We need food, but I want a rack of ribs, okay, that's going to cost me $30, but do I really need to spend that $30, right, on a rack of ribs by going out? No, maybe I could sit there and go to the store and get a rack of ribs for $10, right? Chop it up into 2 meals, right? Maybe go buy some rice, make my own meal, and then the whole meal will end up costing me maybe $4 or $5 for that entire meal, and I'll be able to get 2 or 3 meals, and then I could take that $25 that I saved from that meal and go invest in the stock market, or again go save it for a appreciating asset like real estate. Third, buy appreciating assets, not depreciating assets. Here's a perfect example, okay? Buy a house, okay? Buy stocks. Yes, there is risk involved, but if you do your homework, you start to learn, hey, what's a good company? Imagine if you took $100 and you bought Apple 10 years ago, okay, when it was 80, it went to 1,000, they split back down to 100, it went up to 500, they split, and now it's back down. Well, that $100 that you might have spent on 4 $25 meals, if you took that $100 and put it in the stock market, today it would be worth about $2,000, give or take, right? That's a appreciating asset. Maybe buy a house, okay, look for a deal on a house. You could buy a house with as little as 3% down. If you're a veteran, you can usually do 0 down, right? And use other people's money, which is OPM, right? Where they take on all the risk, and hopefully if the market goes up in value, you're going to make more money, right? And you'll make money off the house. Maybe get a couple roommates, okay? Rent out 2 or 3 of the rooms, right? And let them pay for the mortgage. Let them pay for the utilities. Let them pay for everything. Now you live free, and your job, all that money you get could go into savings and go into the stock market or go into buying a second property, right? Maybe a rental, and let somebody pay the mortgage for the next 25 or 30 years, right? And then by the time you're 50, 60, you now own a bunch of houses that are fully paid off that you let other people pay rent to you, but really they were paying your mortgage, right? Now, there is downsides to all this and all that, but again, these are just more of habits. Change your mindset, okay? Have wants versus needs. Third, buy appreciating assets and not depreciating assets. Next, invest in the stock market. Okay, that is one of the best wealth creations out there, is investing in the stock market. Find companies that you like. Maybe you go buy a stock like AT&T that's in a rough patch right now, but we know they're not going out of business. They're one of the largest wireless carriers, right? Their stock was $45 a few months ago, okay, and a year ago, and they're now around 25 or 26, right? In the 20s somewhere. Well, you could start to buy that for long term, and while you wait, you're collecting a dividend on these stocks of maybe 7, almost 8% on your money, right? Now, there is risk. Maybe they keep sliding for another year, but while you wait, you're receiving a dividend and compound, and instead of taking that dividend and spending it, reinvest that dividend, and that's how you get compound interest, and you'll start to really make money the long way, or over time, and you'll be amazed how much it goes up. And then finally, the fifth one is invest in, or meant to be buy real estate, right? Invest in or buy real estate. Invest in REITs, right? Stock market. Let other people manage everything. Or sit there and go buy your own real estate. Become a landlord. Let people live where you, a house you find, right? Maybe you go in, fix it up, and then you let people live there, right? You rent out the house and they pay the rent, which that rent pays off the mortgage. And again, let's say in 30 years, what you pay 200 grand for today might be worth $500,000, $600,000 in 30 years, but somebody paid that entire mortgage off for you. And then when you retire, you have all this money that comes in. Okay, and that pays all your bills, and if you could build 10 streams of income like that, they're all, dude, you might be worth 3, 4, 5 million, and maybe you sell your entire portfolio and go live your golden years wherever you want and do whatever you want. So I hope that kind of helps with this 5 key habits to saving money, and also making money, right? Again, let's just go over. Change your mindset. What do you really want, right? The way you see it. Don't be like your friends where you just spend money. How about you become a saver? Second, put your wants versus your needs. Third, buy appreciating assets, not depreciating assets. Don't go buy a brand new BMW for $30,000 or $60,000. Maybe you go buy a 3-year-old BMW for $30,000, right? Because a lot of the depreciation has already come out. Yeah, it's still a depreciating asset, but we still need a car. But maybe from the next couple of years, it'll go from $30,000 to $20,000. Well, it costs you $3,000 or $4,000 a year for that car. But if you buy a brand new car at 60 and in 3 years it's worth 30, you're losing $10,000, or sorry, $10,000 a year. It's a lot of money, right? What, just for a new car smell? And 0 miles on the car. Okay, usually you could pick up BMWs for 30,000, the 4 Series with 25, 30,000 miles. Dude, these things will go for 100, 200,000 miles. So different things. Next, invest in the stock market. Start now while you're young, okay, and always invest. Maybe put a certain amount of money in every single month, dollar cost average, right? Just say, hey, on the first, I'm adding to all my positions, right? Do your homework. And then finally, invest in or buy real estate, right? Buy REITs, right? Let somebody else manage it, but you're still receiving dividends and income and appreciation, or go out and buy the physical real estate. So I hope this video helps. If you guys have any questions, anything like that, leave them down below in the comments. But until next time, change your mindset, and we'll talk to you soon. Thank you.